All right. Good morning, everybody. Here we go. December 6th, 2022. It is a Tuesday, and it is time to wake up and open the mother effing market. Hello, everybody. Thank you all for joining me on a beautiful Tuesday morning. Hope everyone's day is going well. Let me just put this on Discord and Twitter, and then we will get right into the stream. Live morning open at here. Oh, I did it wrong. Better do the at here in a different way. I hope everyone's having a great day. It is a beautiful, again, Tuesday morning, December 6th, 2022. Miyoko, hello. Philip, Scott, Eeyore was right, who I just found on StockTwits. What's up, man? Thank you for being here. Iceman, JJ, Crossroads, Drew, Cameron, Richard, and then this new name I haven't seen in a while, Dovya Skinkeys. Good morning from exit 136. I love it, man. I was actually I got back from exit 129. I was just driving. I had to go pick up something. Where's your leather jacket? The leather jacket. You know what's funny, guys? The leather jacket. So I bought that basically as a joke. I honestly just wanted to post a Twitter picture about it, which is why I bought a stupid $50 leather jacket. I bought it and I went on a it's not a date, but I went out with a friend on Saturday that I hadn't seen in a couple years. So she was a girl, so I wore the leather jacket and I took her out to sushi in Jersey City, and I asked her, hey, do you like the leather jacket? And she's like, where'd you get it from? I was like, Amazon. She's like, you bought a leather jacket off of Amazon? And I was like, yeah. And she was not impressed. Let's just say that she was not impressed at all. So, but anyway, I literally wore it on Saturday for like the first time in 2 months, because I'm not a leather jacket type of guy. I'm not a flashy guy. I'm not a Rolex type of guy. That's not who I am. But I wanted to wear it because I was like, I'm turning 25. I should probably have a leather jacket. So I bought the leather jacket. Okay, let me just put this out on Twitter, live, market open, and then we're going to get into it. You know, I'm so grateful that people join these, and it means the world to me because it's really fun to start the morning like this. So I hope you guys enjoy it as much as I enjoy putting these out there. Lots to talk about today in the world of tech and business, so we're going to get right into it. Bring back the glove. Honestly, I don't even know where the glove is. There's so many little, I don't have my rings anymore. I just change every day with all these little idiosyncrasies that I do. I'm so hungover this working amid. Do you drink alcohol? I do not drink alcohol. But I hope you get over your hangover. I had some of those and those were not fun. I'm 29, no leather jacket. And you don't need a leather jacket because, to be honest, I bought it for a stupid reason. So you don't really need one. I look forward to it every morning. I look forward to you guys being here. Thank you so much. Okay, Gabe, hello. All right, let's get into the markets. Couple of things I want to talk about, and then we'll get a little bit deeper. The first bit of news is the Palantir $900 billion TAM. I did a video on it yesterday if you guys want to check it out. I don't think Alex Karp was playing when he said our TAM is worth more than $900 billion. You know, I really do think Palantir is misunderstood. I'm not going to spend a lot of time talking about them. But I have another video coming out today reacting to his argument about at the Reagan Defense Forum. He made a peculiar point about how Palantir is undervalued right now and one day will be overvalued. I don't think Karp's an idiot. I think he realized in February 2021 when they were trading at $100 billion, not even putting up $1 billion of revenue at a $45 premium to their $10 DPO price, up 300%. They are probably overvalued. But at this level, one could argue they're probably undervalued, right? Now, the question simply becomes, what is that sweet valuation range? And I think we can't come to that sweet valuation range until we have a better macro economy, which leads us into the macro economy. The stock market is down. S&P now down to 399. It was not able to break resistance at 408. So we're starting to trend a little bit more downward. Semiconductors are getting hit a little bit. Chris is investing in this triple leverage semiconductor short ETF. I didn't even know it existed. On our Financial Junkies podcast on Sunday night, he brought this up, and he's up on that stock because semiconductors are down. Now, TSM, I believe, is it's a little bit down today, but they're expanding. I saw a tweet about it. I have to pull it up into a new area. So TSM is doing well. No main news on AMD and NVIDIA. Apple, SoFi, everything else pretty much down. Spotify down. Target down. The market relatively down. Nothing up too much, but nothing up too low as well. You'll never be the Jackie O of podcasting if you can't keep your fashion consistent. Well, that's true. It's hard for me to keep the fashion consistent. I just change all the time. Scott, thank you for the super chat, man. I appreciate it, for not wearing 3 rings on the same finger. I wore 2 rings onto that, not date, but that thing I went on Saturday night. And I don't think she was impressed by that either. So it is what it is. Now, a couple of interesting news out of Robinhood. Okay, Robinhood today did something that I was really excited about. And I think it's something to look at when we're talking about investing in the fintech space. Hood is a company that I want to buy, but I haven't been able to actually work up the energy to buy. Robinhood launched this today. Let me see if I can pull it up on my app. They launched IRAs, which are retirement accounts, allow you to invest in there tax-free. And it's really, really, really awesome. So let me just stop sharing here so you guys can see it. I'm now on the wait list. I'm number 700,488 on the wait list for my retirement. As you can see, my phone is so scratched up, right? That's what happens when you live on the edge. You get a little bit of scratches, but you don't fully die. And that's how you live. Ramu, thank you for being here. Good morning. Fadi, thoughts on CRM? I'll talk about CRM in a second. But why is this important for Robinhood? The reason this is so important is because Robinhood really has a vision of becoming a one-stop shop for financial services. Their average revenue per user, ARPU, went up from $56 to $63 last quarter, which I was incredibly surprised, going up 12.5% on average revenue per user, primarily because I thought transaction revenues were going to go down in the context of cryptos, equities, and options. Equities and options actually went up. Options, I believe, 3%, equities, 6%, and crypto went down. So crypto decreased, which makes sense. But the fact that transaction volume in this crappy market went up and obviously increased their ARPU, that was an awesome thing to see. And these suites of products that they get to launch just make it more and more likely that Robinhood never loses me as a customer. They're giving me 3.75% interest on uninvested cash. I have about, I have a decent amount of money in uninvested cash right now because I've not been buying stocks. So, getting that 3.75% interest is not bad. Every month, you get a little bit of interest. That's 3.75 for the year, but obviously split it up by 12 monthly. And it's nice to see that money actually come. Whereas in the bank, I have literally none of my money in the bank anymore because I was getting 0.0001% interest. It felt like it made no sense. Like, why would the bank have my money? Now, it's not FTX levels at 8.5%, but if anything usually goes above 4 or 5%, it's a little bit scammy. So I think 3.75% is nice. I also pay for Robinhood Gold, so you have to pay $60 a year to even get it in the first place. But Robinhood is becoming more and more attractive to me. I love the product. I love using it. The problem is I'm not sold on their long-term ability to compete with Fidelity and Schwab, because I think retail traders just aren't going to give them the volume they need to really become, a $50-80 billion company. Right now it's a market cap of $8 billion. But could you see Robinhood going from 9 to 20? Yes. It's just a question of, do you want to park your capital there and wait for it to actually get to that level? How does SoFi respond? Well, SoFi should probably open up these products. The thing is, SoFi is more of a bank. Robinhood is not as much of a bank. So SoFi has a little bit of a different business model along with lending. Robinhood doesn't do lending. SoFi Invest kind of sucks. Robinhood's whole product is Invest, whereas SoFi's whole product is lending. And then you have Galileo, which actually powers a lot of Robinhood. So I think that's why I'm long SoFi versus long Robinhood. I think there's just so much more potential in SoFi, but the product that Robinhood offers is amazing. There's good companies that have good product and not good stocks. Spotify is one that comes to mind, right? Phenomenal product, but it's really hard for them to make money on music. Now, maybe they change that. Maybe they can make more money on podcast advertising. I don't know. But some of those products, the product is great. Just the stock is not the best. All right, we have 30 seconds to the market open. Once we get into the market open, we're going to talk about Twitter potentially being a competitor to Google search, along with Microsoft being a competitor to Google search. Some interesting stuff I saw today. I'm actually going to make a whole video on it as well afterwards, so I'll talk a little bit about it here because I think it's interesting to discuss. Google looks like it's ready to get disrupted, and it's actually why I'm not long Google right now. I'm not saying to get rid of your Google position or anything like that. I'm just thinking a little bit more deeply about the value of Google in the next 10 years, because search is 99% of their revenues. And I'm really thinking a little bit more critically about what does search even mean. Okay, 9:30 a.m. Thank you. 100 and how many people do we have here today? 155 people being here means the absolute world to me that you guys are here and you're spending your morning with me. It is 9:30 a.m., December 6, 2022. Not that many days left in December, but we're here. We got to make December count. It's time to open the stock market. Wake your ass up. The stock market is now open. Let's get into it. Palantir down 0.98%. Shopify down 0.47%. Apple up 0.34%, moving a lot of their production from China to India. That is one of the big news that came out yesterday. So we'll see what that. NVIDIA 165 up a good 10-20% from its lows of about 109 back in mid-October. Meta at 120 down a little bit. Enphase 334. Apparently, Gabe, who's a friend of the channel, tweeted today that he is shorting Enphase. So if you want to check out his Twitter account, I think it's GS Strategies. You can look at some of his analysis for why he thinks Enphase is a prime opportunity to short. Look, I think Enphase is overvalued. Would I short it? I don't know. I'm a little bit of a scaredy cat, a little bit of a female dog, I guess is what you could call them, for lack of a better word, for shorting a stock. But if it is overvalued, then it might be an opportunity to buy some puts against it. But I am a little bit too scared to do that. Rivian at 29, NASDAQ 11,222, SoFi 4.49, Lyft 1084, Spotify 77, ARC 3564, Ulta Beauty 470, holding up well. Disney 95, falling a little bit below 98 from when Bob Chapek resigned. Alibaba 91, Paramount 19, Datadog 70, Square 63, falling a little bit down from 67, 68 levels after their pretty phenomenal earnings. Snapchat 988, going below $10, down 2.8%, or at least 1.93% on the day. Interesting that Snapchat is down. And Coinbase 46.14. Coinbase has been relatively green the past couple of days. Let's go to the 1 year on Coinbase. It was stuck at 40 about 3 weeks ago. Now it's at 46. Highs of about 113 in July. This is when BlackRock also announced some partnership with them, or was going to announce buying them. This also came a day after Cathie Wood started selling them. So that's that. And Bitcoin at 17,000 right now as well. Morning and make good morning. Glitch life. Google could easily just make their AR Snapchat. Okay, so let's talk about Google. So I want to show a tweet here by George Hotz. For those that don't know who George Hotz is, he is just a brilliant programmer, and Elon hired him to kind of fix Twitter search. Now, what's the problem with Twitter search? Okay, the problem with Twitter search is that it sucks. It really sucks. So if you go into Twitter, right, let me zoom out a little bit, and I type in a question like, how do I fix my life, right? Let's say we ask that question. Then I got a bunch of crappy tweets. Look at this, from August 23rd. We got 2 ads that don't really help us. We got a bunch of random tweets. We got a cat. Like, I don't know how this answers my question, right? It's just a bunch of random stuff. Then you click on latest. You get the most latest tweets that aren't that relevant as well. I haven't been feeling the Christmas spirit for the first time in my life. How do I fix it? It's like, okay, I don't know how the answer is. People, there's no responses for people. There should be a lot of responses for people because a lot of things are related to self-development, coaching, life, health and wellness. All of those people that tweet about those things should automatically come underneath this query, like logically, but that doesn't come up. Then you get photos. And I don't know what photos you're going to get here. And then videos. I mean, maybe there's going to be some relevant videos, maybe not. It's definitely nothing as good as you. Look at this. There's no videos for how do you fix my life. So here's what George Hotz has been proposing. And this is a really interesting concept, right? Twitter search proposal. Imagine posting a tweet asking a question. Search returns what would be the replies to that tweet. Easy to ground truth, then fine-tune with RLHF based on interaction. I actually don't know what RLHF means, but I'm assuming he's talking about some type of AI protocol to be able to use potentially even GP3 to give a better response. Think it works? Include links to relevant papers, please. So what he's asking here, as we've seen from chatbot that's been launched by OpenAI, that you can ask any question and it gives you a response, which is fundamentally challenging the business model of Google. Because what is the business model of Google? You go to Google. And can you guys see my Google right here? Can you see it? No. All right, let me change it right here. You go to Google and I say best, what do we got? Best relief for pain in tooth, right? And then look, we get a bunch of ads here for some tooth pain, Oragel, Dentrek, whatever. By the way, I just bought Bengay today. So it's kind of ironic. This is probably why I typed it in. My neck has been hurting a little bit. This is what happens when you get older. But so we got that. And then we have a little bit of a snippet from this website, from WebMD, a very respected website. And then you get a bunch of links, right? And the goal is within these first 50 seconds, you should be able to click something and immediately get the answer you want. Well, what happens when I type that same query into something that's using a natural language processing model via AI, where user-generated content does not show up, meaning the WebMD website does not show up? And again, WebMD has spent probably hundreds of millions of dollars optimizing the website so that they show up for that first result. Imagine that there is an answer that pops up that's not rooted in content on the internet, but rather something trained through an artificial intelligence model. That is what is the existential problem that Google has to deal with. Now, one may argue, well, what if Google just builds their own version of it? It's like, yeah, they could, but their entire business model is still like YouTube, right? If I search for a video about Palantir, maybe Amit pops up. And that's great because now I get to discover Amit's content, and Amit gets a lot of the benefit from you discovering my content. The problem is, what if an AI-based Palantir video pops up? Well, now think of all the intermediaries that get hurt. Amit doesn't get his content discovered. You don't get to discover Amit, and you might get an even better video than I could ever create for you because this AI thing created it. And you get the value of your time back without getting any of the value of me. And by the way, YouTube doesn't get to sell an advertisement on your search query. This challenges the nature of search. I don't know if it's good. I don't know if it's bad, but it definitely challenges what search can become. Twitter, which is trying to justify its $44 billion valuation. Imagine if people went to Twitter to search questions and somehow all of the user-generated content on Twitter, which, by the way, is 500 million tweets a day. That's a lot of tweets. Somehow is run through a natural language processing model via AI that is then able to give you an almost exact result to your question. You have doctors tweeting all day. You have lawyers tweeting all day. You ask a legal question, ask a medical question, and that thing pops up. I mean, it's not as advanced as like a pure AI tool giving you a question. It's not as probably amazing as user-generated content from SEO blogs that are optimized for search. But if user-generated content is on Twitter at the tunes of, hundreds of millions of tweets, and Twitter can give a better response than other companies, that is a potential for it to take away a little bit of market share from search. Now, it would be hard to do this, and it's just an idea, but if it could happen, then it would be a good idea. When is Cowbell coming back on? Cowbell will be back tonight. So Tom has had some family issues. They're actually a little bit serious, and so he just really hasn't been able to record. But we should be good today, 2:30 p.m., Daily Cowbell channel. We will be live talking then. So it's an interesting concept. DRK, thank you for being here. Quarantine Quartet, thank you for being here as well. And we will see, if Google is actually able to be challenged. Let's look at Google's market cap right now. 1.29 trillion, sitting at $99, low of 83. So it's up a little bit from about 10% from November 4th. If you look at their max chart, again, Google IPO'd basically at $10. It went up 150 times from them, or about 120 times from them. So buying Google right around here in 2020 at $60, you've got about a little bit of a triple on your money. Now you're sitting at a little bit less than a double. The idea that, and the reason I'm asking this is because, we're trying to justify $1 trillion of valuation, right? Apple, the reason it hasn't been able to go to $3 trillion is because the market can't justify it yet. Google, for them to go from 1.29 trillion to 2.5 trillion means the amount of search volume they need to have a monopoly over, essentially, because again, 95% of the revenue is search. It's not cloud. They want it to be cloud, but cloud is not as universal as search. And I know we're in the infancy of cloud, but search is search. They pay Apple $15 billion a year just to make sure that the default browser on your Safari is search. If that gets disrupted, Google's not in a great situation, right? And I'm not saying it's going to die. I'm just saying they have a monopoly on search. Like Bing and Naver and DuckDuckGo, they're not messing with Google, right? So at the point where that gets disrupted a little bit, you got to actually think, is Google a long-term stock that you want to hold, especially because they just haven't innovated, right? Like, what has Google done in the past 5 years? That's that unique. And if there's nothing there, then it's a little bit hard to justify owning the stock. Okay, let's get into some of the talking heads and seeing what they're saying. We have JP Morgan CEO Jamie Dimon talking about inflation. Let's see what he has to say. How many Oculus Meta headsets does Meta have to sell to make their money back? A lot. I think they sold like 15 million of them. They probably have to get closer to like 30 to 45 million to make a decent profit on it. All right, let's get into this one.
I think there's so much happening right now around the globe. We've been waiting for this conversation. You know what's happening in markets. You know what's happening in the economy. You know what's happening with consumers. What do you see right now? I think everybody was concerned. What was it, 6 months ago when you said a hurricane is coming, you better prepare?
Yeah, so I didn't really say that. But let's just start by saying the United States economy is the strongest economy in the world today. So we should celebrate that a little bit. And that's why capital's coming here, business is coming here, is still growing. If you look in the short run, the consumer is spending 10% more than last year and 40% more than pre-COVID. They're spending it in different things. So all you speakers up here, some are doing better, some are doing worse. That's a tremendous sum of money. And they have $1.5 trillion still in their checking accounts, more than pre-COVID. So the spending is down. That's the good news. And the companies are in good shape too, by the way, and their balance sheet, consumer balance sheet is in great shape. The other news, which is not good, is that rates are now, 4% on their way to 5%. Inflation is eroding everything I just said. And that $1.5 trillion will run out sometime mid-year next year. And so when you're looking out forward, those things may very well derail the economy and cause this mild or hard recession that people are worried about. But far more important than that, by the way, is all the geopolitical stuff.
It's a big
But
decision,
wait,
mild
you
and
said
harsh.
5%. You said 5%. You really think that's where rates are going to stop? The terminal rate?
I think the Fed has made it clear they're going to get to 5 and stop for a while. I read a while as 3 to 6 months. That may not be sufficient.
You'd still go to 5 if the 10-year stays anchored at 3.5, or you don't think it will? You think the 10-year's headed back up?
I think that you have to look at the other risk we have is quantitative tightening. We've never had it before, ever in the lifetime of mankind. So I look at that as something we should be quite concerned about. And so the suppression of the 10-year bond rate has been going on for 20 years, and it can't really be suppressed anymore. And QT has just started, so it's very possible. And if you have like 2% on inflation, you should have the 4% bond today. So I don't look at this like it's got to go get better than here. Obviously, it's a risk on trade, but that mindset may change if inflation sticks around a little bit longer.
You said
That's interesting. So Jamie Dimon saying even if we have 2% inflation, the 10-year should be at 4%, meaning he's not in the camp that says the bond yield should go down just because like the reason people don't invest in bonds when inflation is down is because that means interest rates will be down, which means growth stocks will be doing well. So why would you put your money in a 10-year that gives you 4% when you can put your money in something like Tesla that could give you 400%? But the reason bonds go up is because stocks are an unattractive investment. They're more risky. So you put your money into bonds. So his argument is like, well, if inflation goes down to 2%, you should still have a 10-year at 4%, which is a interesting argument. Also, you guys are making Lindsay feel bad. So stop talking about Becky so that Lindsay doesn't leave the building.
said geopolitics is really the issue that we need to watch.
Yeah.
What,
So you have this
obviously-
economy, but then you have oil, food, fertilizer, war, humanitarian crisis. We've not had a war in Europe like this since 1945.
Right.
And back then we said never again. And it's again. And then, of course, it's causing all this people rethinking secure lines and China and trade. And there's a lot of geopolitical upheaval. And add to that, by the way, there are a lot of emerging market countries that a lot of people don't focus on are going to pay a heavy price to the strong dollar, higher rates, and higher oil prices. And so that stuff is really significant. I don't think we've seen that kind of turmoil in the global world for a long time. And what I said about a hurricane, I said that's storm clouds that could mitigate. It could be a hurricane. We simply don't know. And I think, as a risk manager, I prepare for both. But I'm not guessing which one's going to happen. I simply don't know.
As a risk manager, which one looks like the more likely scenario?
I don't know.
So
I
50-50?
put that whole mix of stuff and turmoil to be worried about. And we need great American leadership to resolve those issues. And so that's the most important part.
All right, so that's Jamie Dimon, CEO. He's not bullish or bearish. He's kind of just like, yeah, American economy good. America will be good forever. So don't bet against America. But he's not necessarily saying that whole hurricane comment. JP Morgan's an interesting company. They put out, articles and things every day. They said S&P to 4,800 2 months ago. Remember, Gabe shared me that article. It's like, really, S&P to 4,800 3 months? Like, they just put out anything, right? So his job as a CEO is not really to make these definitive predictions, but rather to just be a good face on what's going on in the economy right now. We got Roku at 54.67. Roku is a company to keep your eyes on. The reason for this is not because I believe in their moat. Is IRA good on Robinhood? It's not rolled out yet, so we'll see. But I think they've executed very well on pretty much every financial product they rolled out, except taking away the buy button from GameStop and AMC. So we'll see what happens. The reason Roku is a company to keep your eye on is a $7 billion market cap bringing in $3 billion of revenue. One could argue it is technically very undervalued. Now, does that mean you buy Roku yet? I don't know. I'm not long Roku, but it is a company that is one of the only companies in ARK that I think that and Ginkgo Bioworks, but Ginkgo's a biotech, so it's going to have a hard time in the macro right now. Roku is a company to keep your eye on. I've been learning a lot more about Roku. I've been watching a lot of the interviews from CEO Anthony Wood and seeing a lot of the stuff that he's been saying as well. The problem is Roku is trying to become Netflix. If you really listen to Anthony Wood, it's not just an operating system. They want the Roku channel. And by the way, they had 21.3 billion hours of watch time last quarter, which is good. But in comparison to Netflix, it's just not nothing, right? They want to build Roku One, which is like their own official Roku studio, to be some like official content house. And that's where they lose me. If they weren't doing that, I would want to look at Roku a little bit more. But it's hard because I don't think they're going to be that big of a player in content. Sachin, thank you for joining. I appreciate you. Ahem, UiPath. That is also true. UiPath is the one thing in all 6 of Kathy's funds. For the year, it's obviously done not the best, right? Down a bit, but it is trending a little bit more upwards, and it's a little bit more of a runner. $7 billion market cap, price of sales of 6. UiPath is a AI-based automation tool that does a lot of different things on. It's a SaaS-based company that does a lot of different tasks and functions for different businesses, and it automates that stuff for you in a way that's really interesting. I played a video on them a while ago. It's worth a deep dive. I haven't done a deep dive on them yet. But it definitely has a big of a following, and it's one of those Kathy stocks that's interesting. Chris, I already signed up to. Chris is like, check your text message, Amit. Sign up to the wait list so I can skip ahead. My guy, I've been signed up to the wait list. Like, I'm not gonna help you skip ahead because I'm already on the wait list. So I gotta send that message to other people that don't have Robinhood accounts. That's a great marketing strategy. See what Robinhood is doing, right? Let me show you guys this right here. Robinhood is basically saying, if you want to skip the line, you can get off the wait list and invite your friends, right? So as a result of that, you can get more. And this is how they grew initially, right? They were giving like a $5 referral fee to every new customer you brought on. I got like 5 or 6 people to join, and $5 to Robinhood when their ARPU is $63. Really, it's a absurdly low customer acquisition cost. So the more people that join, the more people have the opportunity to discover that product. I like Robinhood, man. I like this IRA product. I'm interested to see it. Amit, Robinhood also supports lending your shares for money. That is true. I haven't tried that product yet because I don't fully understand the concept of lending shares for money. I have to learn a little bit more about it. What does it mean from a collateral perspective? What does it mean from my liabilities, if I do have any liabilities? So Chris, maybe we could talk about that on the pod because I would love to know that. Look at Palantir, man, 4 cents away from being below 7. If it's below 7, I'm buying today. 704. Wow. This guy fell today. You would this guy fell. Google's down, Robinhood's down, TSM down a little bit. Meta, look at Meta. Wow, went from 120. Wow, 4.2%. Market's crashing a little bit. Apple at 145. NASDAQ went from 11,222 to 11,161. SoFi is down. Lyft is down. Ginkgo down. 52-week low, basically. ARK is down. Target's up a little bit. Tesla. Oh, I clicked on Tesla. I thought it was 94. I was like, oh, Tesla collapsed today. No, Tesla's at 178. Low is at 166. I know a lot of people that are waiting. Didn't Chicken Genius say 140 on Tesla? So, I mean, let's see if he ends up being right on that one. We'll see how far it can go. Such as says, if Palantir stays below $8 by December 6th, I will add 30,600 stocks to my position. Wow. Wow. So let's do, why that number, Sachin? Is there a specific reason for that number? So if we do 30,600 times, let's say 750 average, Sachin is ready to spend another 230 grand on Palantir. Interesting. Yeah, I mean, look, if again, when this macro gets better, people are going to be saying, "Oh man, I should have bought under 7." We saw a little bit of a taste of that with Palantir, I think in like a November, in October. Where is it? Right here. When we ran up, we ran up to 1097 August 4th, 2022 from the lows of 644. So we were up almost like 60. What's that? Hold on, let me just divide that real quick. 1040 divided by 640. You were up about 62%, right? From the lows. And so you're looking at 7. Do we really think Palantir is not going to get to $12 one day? Right? Do you really think that's not going to happen? So if you do 12 divided by 7, that would be up 71%. It's like the freaking problem is our averages, including me, are at the $17, $18, $19 range, which sucks, right? So if I buy a lot of Palantir, it's just getting my average down to like 14, 15. But if you're bullish on Palantir, to imagine it doesn't go to $12 at 7. The question is, when is that going to happen? Maybe it takes 2 years. Maybe it takes another couple months. I don't know. That's a 71% gain, much less $14. Then you have 100%, much less $21. You have a 300%. Right now, obviously, I'm just spitting out these numbers, but in the context of it being undervalued, and for the revenues they're putting up, and for stock-based compensation going down, and for dilution being minimal, 2-3%, it's not insane. One could argue that $7 is incredibly undervalued, especially when you take into context the technology. But it all depends on a macro. That is the defining factor for it. My average is 11. That's 11. I love that. 7 is very attractive price in my opinion. Yeah, and it's 708, 704. It's better than 730, 740. Chicken also has Palantir in the portfolio. That's true. He doesn't talk about it too much. Hey, Amit, your live stream is one of my favorite shows on YouTube. Cash King, thank you so much for being here. I appreciate that. It means the absolute world to me. Let's look at some. I need some new stocks as well. Guys, got to put some tickers in the chat. We got to add some new stuff to the watch list. I want to look at some new things every day. Some different things that are piquing my attention. Salesforce. Let's talk about this. So CRM, Salesforce, this is a company that has a $132 billion market cap. They are trying to do $50 billion in revenue by fiscal year 2026. Salesforce is one of the most phenomenal software as a service companies, trading at a 4.3 times price of sales. The CEO left the other day, or the co-CEO left, and the CEO of Slack left yesterday. Slack was purchased by Salesforce in 2021 for about $41 billion. So it's interesting, some of the shakeup. As you can see, the stock is down. It was at 180 in August, now down to 130, even 160 just a couple of days ago, or a couple of weeks ago in November, now down to 130. I think a lot of this shakeup has hurt the stock a little bit as well. Then you go to something like Snowflake, recovering decently from its earnings. It went down about 5% on earnings, down to 122, but it's up all right now. Snowflake, $43 billion market cap. Think of this right now. Salesforce is a $132 billion market cap, right? Say CRM, Salesforce, $132 billion. You look at something like Snowflake, is 43. So almost 3 times. Snowflake is 1/3 of the value of Snowflake is 1/3 the value of Salesforce, and Snowflake is nowhere near as big as a company as Salesforce. I think if that doesn't show you that the valuation on Snowflake is a bit ridiculous, I don't know what does. I mean, we're talking about Salesforce. We're Salesforce versus Snowflake trading at, I don't even think Snowflake should be anywhere near the level of Snowflake, especially, or Snowflake the level of Salesforce, especially because how much they're spending on sales and marketing to grow. So I don't know. Amit, add SE and U to your watch list. Okay. The thing about SE, this is a stock that Kathy sold out of, right? So SE is now on the watch list, and Unity I've been looking at a lot more. I know their share dilution is a bit crazy, but I've been looking at them. SE, correct me if I'm wrong, Kathy's been selling. This is a gaming stock, if I'm incorrect. Correct me if I'm wrong. I believe it's a gaming stock, and I believe Kathy's selling out of it, but I don't know. So you got to let me know. ENVX, dude. Sunny's saying, CRM, are you 70? Yo, this is why I like Sunny, bro. He has the same mentality as Sachin. He's like, look at this. Ray says, I know you want to buy SCHD. Bro, literally this morning, I was thinking of setting up like an official dividend portfolio. That's how funny this comment is. Sometimes I have to remember I'm not 70, but I also because I'm being so risky with my like actual life and trying to build a startup and everything. It sometimes makes me think I should be a little bit more safe. And then I see you guys and you're like, no, forget the safety. But obviously, CHHD, CRM, they're not giving you 2-3x's anytime soon, right? They're just safe, and that's why I want to have a little bit just to be a little safe. It's nice to be a little safe, especially when I've got a lot already in Palantir. But ENVX, I know Sunny's been talking about this one for a while. Let's add this to the watch list. This is another solar play. Sunny, again, for those that don't know, Sunny, this thing trades at a 349 price to sales. Are you sure this is a? Are you sure this is a good one? The market cap's not too crazy, but Sunny, for those that don't know, he's a friend of the channel. He bought Enphase at like $1. Enphase is now $300. So he got the solar game right 5 years ago. And so I trust him when he brings up a recommendation, at least to take a look at this stuff. But I haven't done a deep dive onto this. It might be worth adding a deep dive. But the dividend Twitter is insane. That is also true. Benioff needs to stop running the company for employees and start running it for shareholders. Well, Benioff believes in stakeholder capitalism, and as a result of that, it's not always for employees. Not a solar play, it's a pure lithium play, and they solve thermal runaway and batteries. Yeah, but 349 price of sales, is that justified, Sonny, or are we like, is that good or not? Yes, I think Kathy did dabble with SE at some point. They're a tech conglomerate that does have an end game arm. Ticker symbol U is a good concept. Okay, I will look at SE. I'm gonna just watch Ticker Symbol's video on it because Ticker Symbol U has really informative content. I didn't know he covered SE, but it makes sense. I know it was based out of Asia, Singapore. I knew that. I'll listen to his audio. So if you want to, it's probably on audio. If you type in SE on audio, we'll see if his content pops up there. Crossroads says, be very safe. Don't invest in Meta. Crossroads, I think I saw your comment that you posted. Your bear case was not really that substantial to me. Like your bear case was, let's actually read it. Let's read it. Okay, let's read Crossroads. There's a friend of the channel. Let's read their bear case on Meta. I did a video on Meta yesterday. Well, it wasn't my video. It was a clip from our Financial Junkies podcast, which a lot of you, by the way, have said you liked. You guys really enjoy it. And I'm happy that you guys are enjoying that podcast. I think there's a fun vibe. We just set up our Fidelity accounts yesterday to do that public challenge, me, Chris, and Vitaly. So we were doing that right there. All right, let's look at Crossroads' bear case. So this is a friend of the channel bringing up the bear case. Salesforce has debt and barely generates operating income, bro. Yeah, well, it's stakeholder capitalism. That's why I'm not long Salesforce, but also that's Benioff's argument. Okay, so here is their, you can see it. Here's their bear case. Let me look it up a little bit. Okay. So Crossroads says short version is long-term bull thesis is broken. Meta cash burn and long way off. TikTok ban not guaranteed and likely not to shift users to Facebook Reels. Niche at best. International growth revenue not offsetting domestic decline. Okay. Bear case is real recession, continuing declining revenue at the same time as costs increasing, even with layoffs, which is almost guaranteed in the short term. Increased competition, which is what Carlos was talking about in the podcast, and ad spend decreasing due to recession, usually first cut, while Meta burns cash. Likely can still make money on it, even while the bear is true via short-term trade with the market reversible long-term opportunity cost is real. So I don't agree with this. I think a couple of things. Number one, this increased competition. I don't think there is increased competition. There is no company that's competing with Meta outside of TikTok. Even if TikTok doesn't get banned, me personally, I don't use TikTok as much as Instagram Reels anymore. Why? Because Instagram Reels is getting really good, and 50% of the watch time that exists on TikTok now exists on Instagram Reels. Like, I think this idea of competition, YouTube Shorts isn't even competing with Instagram, right? Like, YouTube is YouTube. It has its own thing. Instagram is its own thing. I really don't agree with competition when it comes to Instagram Reels. Second of all, you didn't mention WhatsApp. I mean, you mentioned everything except WhatsApp. WhatsApp has 2 billion DAUs that are not monetized yet. That, even if ad spend goes down, which I'll argue in a second is not going to go down, WhatsApp monetization is likely going to make up for it. Second of all, this whole ad spend decreasing argument, this is also hard for me to accept. The reason for this, and I would love to know your guys' thoughts in the chat as well. Where do you go to advertise your product? You're always going to have to advertise your product. Even if ad spend on a macro goes down, the bulk of it is going to go to Google and Facebook. It's not going to Twitter. Elon is like adversarial against advertisers. It's not going to, I don't know, TV and radio. So like, where is it going? Like, someone tell me, where is it going? Going to TikTok? Maybe. I mean, but TikTok only did $12 billion. Facebook did $130 billion of revenue last year. TikTok did $12 billion. It's not going to Snapchat. So it's like we really have to ask ourselves, where is the ad money going? And if a macro decline happens, that means the entire industry and the economy is affected, which means if Meta goes down, then every company goes down. It's not like there's an opportunity cost because you invested in Meta and you could have invested in Palantir. Everything's going to go down, right? If ad spend goes down that dramatically, that we have like a very big recession. If that's not the case, where's the ads going to go? I think it's going to go to Google and Facebook, and because they have all the users, they have the best data. And then finally, this idea of not likely to shift users to Facebook. Again, this is something that I've been researching more. Facebook still has a majority of the world's attention, even if not in the United States. In developing parts of the world, Facebook is the news. Even if we don't use it because we have other sources for information, Facebook is the main primary source, at least now, for a majority of the world. So having said that, it's just hard for me to imagine that that's going to change anytime soon. That's the problem. You know, that's the biggest problem to me. WhatsApp was part of the longer bear case argument that didn't post. That's only part of Meta. I'm bullish on. Love the Indian market, but revenue is a tiny part of income. Yeah, and you know, if that expands, then that's going to be beneficial for Meta. But we're going to ultimately have to see. Ad spend risk recession, if we have a severe one, goes down considerably from where we are. I agree with you. The problem is there's a double bind to this argument, Crossroads. Either ad spend goes down so dramatically that the entire economy is going to be in a recession, right? Because If ad spend goes from, let's say the digital global ad market I was looking up today is 500 billion. Let's say that drops in half. Let's say it goes to 250 billion total TAM, which means Google's TAM in terms of digital ad markets and Facebook's TAM and Snapchat's TAM, all of that stuff, they're eating out of the same $250 billion pie. That means everything's going down. Because if businesses can't advertise, they can't get customers. If they're not advertising because ad spend's going down, that means businesses are going down. So that means the entire economy is going to go down, which means it's not just Meta. So it's not specific to Meta. It's not specific to ad spend because companies aren't going to be spending on other things if they're not spending on ads, even if ads are a little bit more heightened. The second thing is, even if ad spend goes down, a lot of that's still going to go to Meta and Google. Like if the TAM goes from 500 to 250 billion, I would say 60 to 70% of that is still going to go to the two main conglomerates that exist. So that's kind of the main problem when I hear that Meta. Now, the metaverse spending stuff, I agree with you there. The CapEx is ridiculous, and I don't like that because I don't really think of the metaverse as anything revolutionary. But that's one of those things where it's like, yo, a CEO's got to be a CEO. Like Elon's got to buy Twitter. You invest in Tesla, you got to deal with Elon buying Twitter. Why? Because Elon is Elon. Zucks is Zucks. He's going to do what he wants to do because he believes in this shit. Let him do that stuff. As long as you keep printing money on this stuff, I'm okay. But the metaverse shit, I don't believe in. The Twitter Elon thing, I don't believe in. I mean, I think Elon can turn it around, but it's definitely not the best thing for Tesla, but whatever. Eccentric, it's like me wearing my rings or my leather jacket. Sometimes you got to let an eccentric CEO do what they want to do because that's just who they are, and hope that it doesn't ruin, your investment thesis. And with some of these visionaries, a lot of the times it helps with their investment thesis. So Palantir below 7. Oh boy, here we go. We got to cover it. First off, Sunny Coates, thank you for the $20 super chat. Means the world to me. Keep up the good work, kid. Lunch on me. Love your market open shows. Afternoons for me. Research NVX. Thank you, Sunny. Means a lot. I called you Carlos because I associate you with the freelance finance guys. $20 means a lot. Super chat helps a lot for the channel. Thank you, Sunny. Means a lot. I appreciate you, man. And ENVX is now on the watch list. We'll be checking them out. All right, let's go into Webull because we got Palantir at $6.99. Is it time to get a little buy-in? Is it time? $6.98. Wow. Here we go. It is time. All right. Is it time? $6.96. Ooh. Okay. I think it's time. Let's do a small buy. Very small for me, but still, we got to do it. Here we go. $200 buy on Palantir. Actually, let's just do 50 shares. That's easier. Let's do 50 shares. Buy shares. I said I was going to buy it if it goes under this. If it goes under 7. Here we go. 50 shares right there. Let's pull it up. And it's done. What did we get it at? We got it at $6.97. Okay. 50 shares under 7. Not bad. My average is now $18.10. But not the worst. Not bad, man. All right. Look, it's down. It's down because it has to be down. Let's see where else the market is down, though, if Palantir is down. $6.96. Okay, so what else is down if Palantir is down? Snowflake is down 1.65. It's not specific to Palantir. I mean, it seems like the entire market is red. Look at this. We have a sea of red. An absolute sea. Oh, look at this. There's nothing green. Where's the SPY? 396 at 80. 396.80. Well, look, S&P is down from 408 to 396. Let's see. Meta, look at that bad boy. 115. I want Meta at 80 again. I should have bought at 88. I want Meta back below 100. Let's get them there. Because now I'm getting to the point, bro, where I think we've seen the bottom in October 13th, and then we rebounded, and hopefully that was a bear market rally. The reason I'm saying hopefully is because I want it to go down even more. Look at this. Shopify was 45 yesterday, now 38. I like this. Let's get to the red, and let's start deploying the cash, because if it's time to go red, it's time to go red, and let's see what we can do. I'm excited for this. Netflix should not be $307. It's down today, but it should not be $307. Netflix should be going down. Look at the Enphase. It was at 335 this morning, down to 315, down 5.86%. NASDAQ almost dropping below 10,000. NEO down 0.5%. Lyft is down. DoorDash is down. ARK Innovation went from 35.30 to 34.88. We are seeing a bit of a crash. Shit, you just peer pressured me into buying some more Palantir. Come on, man. Under six. Come on, bro. Cameron, I'm in for $200 too. Come on, man. I'm just trying to get my average under 10. It's been a journey. Me too. What program are you using? This is called Webull. It's free, Matthew. Webull. Webull. It is free. You guys can check it out. Open Door at 1.5. Coinbase was at 46. Wow, down 6.7%. Let me tweet out Palantir below 7. Let me tweet this out right now. Palantir below 7. Below 7. Wow. We've got a... I didn't expect this morning to go like this. We haven't seen Palantir below 7 in a while. Wait, let's look at the chart. When's the last time Palantir was below 7? Let's look at the 6 months. Yeah, last time it hit 689 in November 7th, but before that, it's been May 644 in May. That was the bottom. 644. So we got to see it lower than 644. It's been wow. So it's been a while. So look, man, all I'm saying is Palantir's I don't think it's a $6 stock. Now, could it go lower than this? Absolutely. But I'm buying when it gets like at one point you have to get to the mentality that you don't get rich when you buy something at $18. You buy something at $6 that's worth $18 or $20 or maybe $200, right? Like that's the mentality. And that's why we keep dry powder ready for these moments. So don't have to go all in on this. Could drop a lot lower. But at the end of the day, you've got a DCA when it's time to DCA on a position you're long on. That's it. That's all that matters. I got money ready to buy home from Open Door at a huge discount. CleanSpark. Where's CleanSpark at? Wow. CleanSpark. I did an interview with the executive. They actually invited me to Atlanta to go view their facilities. The problem is I don't care that much about Bitcoin mining, but I know it is a stock that is, people argue, is incredibly undervalued for what they do. I just haven't gotten into them. But CleanSpark is low. How many shares do you have? Let's actually look at how many shares I have right now, because I don't know. On Palantir, you guys want to see some loss porn on Palantir? Let's just show Robinhood. Let's just show the loss porn on Palantir. Everyone loves the loss porn, don't we? We love the loss porn. Here we go. Are you guys ready to see the loss porn? It is what it is. It is what it is. Got to deal with it. All right. You know, you got to deal with your losses. You got to take them, and you just got to DCA and move forward. If the thesis doesn't change, if the thesis changes, you're out. If it doesn't change, you're in. And if you're in, then you're in, and you got to deal with it. So my market value of Palantir, let's zoom in onto this bad boy. 17,331. There you go. Down 28K, down 61%. Look, it's bad. It's ugly. It's bad. 2,500 shares, 67% of the portfolio, average cost 1810. It's bad. It's not pretty. It's not pretty, but it is what it is. And so as you can see, this average cost used to be 25. So it's gone down significantly. And if I can get this to 15, do I think Palantir goes from 7 to 15 in the next 2 years? Yes, which means I'll be made whole. And then from 15 to 100 at least by 2026, 27, 28. I think that's very possible. We just got to see. But there's the loss porn. So everyone sees it right here. 2,500 shares in the Palantir. I'm down like 12K on all my stocks combined. Well, good for you. That's not bad. Ooh, that hurts my nuts for you. Look, it is what it is. It is what it is. The problem was I was buying it at 12 and 13 when the earnings happened in February, and it dropped from like 19 to 12. And I was like, all right, this is great. I just had no idea it was going down to 6. I was like, all right, I can't control it at that point. I can't control it from that. Wow, look at this one. Palantir loss porn for me is 6. This is what I want to be when I grow up. That's Sachin. For you guys that don't know, check out his channel. You can click on the comment. You can see his channel as well. $675,000 Sachin is down. That's real loss porn. 28,000, 12,000, 10,000, 5,000. That's nothing. Talk to me when you're down almost 700K. And look, the reason you're down 700K or anyone's down that much is because they have that much invested. So when it comes back around, the returns are going to be that astronomical as well. Look, at the end of the day, when you're playing with big boy money, which Sachin, who's a private investor in SpaceX and obviously, you know, a very, very well allocated investor in a lot of different asset classes, he's down. But he's playing with big money at the end of the day. He's playing with a lot of big money. I'm down 200K. So, wow. So we're all down money. We're all down a ton of money. I remember watching that video where he went all in on Palantir. Yes, that was his U.S. portfolio, remember. So he has other assets outside of his U.S. portfolio. But that is pretty much all in. He's also just sold a bunch of cash secured puts on Palantir, so got some nice premiums on those. But that's that. I am down 44,000 on Palantir. Damn. So my 28 is nothing compared to you guys. Goodness. Guys, I can't, I'm just so happy we're all here as a community, all 246 of you. I know a lot of you are Palantir investors. There's going to be a day where we're up. And we're going to be up because we believed when no one else believed. It's just that simple. And we did all the like at the end of the day to make astronomical return. Like the people that invested in Facebook in 2005, they knew something about the world that the rest of the world didn't, which is that the world was moving online, real identity was going to be a thing, social networks were going to happen, and they made a crap ton of money. They're not that different from us. The reason the only difference is they had access to that opportunity and they knew about something before it exploded. It's the same thing here. I'm not saying it's Facebook level returns. I'm saying you know about something, you've done the research, and you've put your money where your mouth is, and you just now have to wait and believe that you know something the rest of the world doesn't. And we'll see. We'll see if we end up becoming correct. Sachin, please tell Elon I will sell my left nut to get in space. SpaceX right now, I think, is valued at like 150 billion private. Just bought more here, 690 long term. Yep, long term. Investing is going down 30% to make 300%. Remember when everyone was pissed at me for selling? Chris, I don't think people were pissed at you for selling at $10. I think people were pissed at you for selling because you didn't have a good reason to sell. Like your reason to sell was just that you hate carp. No one would have, if you said, hey guys, I'm getting out of this at 10 because I feel like it's going down, I don't think anyone would have cared. Like literally, I think no one would have cared. Your logic was that you think carp is a horrible CEO and they don't know how to sell. Like going from $10 to $6 has nothing to do with anything you said 3 months ago when you sold. It has everything to do with the macro. So that, I think your justification for selling just left people like, all right, like, what are you talking about? But could it go down in price from a technical perspective? Of course. And if you want to sell to get out of that and then like tax loss harvest and get back in, that's totally fine. That's just investing. But your logic was a bit off, in my opinion. A bit off. Amit, show them the SOX text I sent you. You just sent me a text. Okay, so we're going to show Chris's gain porn. Okay, so he invested in a ticker symbol called SOXS, which is a ticker symbol that was short, is triple leverage short semiconductors. This is the picture he just texted me. So he's up 4.3% on the day at $900. He has $50 calls. He has $9,450 worth of SOXS 30 debit spreads, as you can see. So at least Chris is doing well on a day when some of the peasants like us are not doing well, but not bad. SpaceX is $150 billion in stock. Its stock price is $82. I answered it. Wow. This is why it's really cool to like have friends and people in your network. And I'm really happy to know such. And just because it's cool to talk to people like this, this guy invested in SpaceX at $16. It's now $82, $150 billion company. That's cool, man. That's cool. It's cool to just know people that have done stuff like that, just to gain insights from them, talk to them. I appreciate you, Sachin. That's so awesome. Congrats to you, man. That's amazing. That's super awesome. New IRA update, yeah, for Robinhood. It's launching soon. Hopefully we'll launch pretty soon. Just bought 25 at 690, DCA at 1177. 1177, not a bad average at all. Amazon is down 47% this year. So yeah, that's the thing, right? It's not a Palantir problem. Amazon is down fucking 47%. At some level, you've got to ask yourself a question of how bad this is going. Except when you're down almost 40% from DPO prices, will take even longer for a stock to recover. People behave like the stock will immediately turn to multi-bagger. Look, I don't think we know what's going to happen in the next couple of years. One can argue that at 2025 it's going to be $10. One can argue that it's going to be $50. Like you don't know what's going to happen. You just got to wait. And if you got to wait, you got to wait. That doesn't mean you have all your capital there, but you just wait. If you believe in the long-term thesis of this company, you wait and you give them some years of grace, let them execute the mission. When the CEO says our TAM is 900 billion, I don't think he's saying that. And then 10 years later, they're a $10 stock, right? Like I think they have something, but I think Karp has a much, much bigger vision for this company. And that's what you want in a CEO. You don't see Mark Benioff talking about that type of vision 17 years after Salesforce has been public. He talked about that in 2005. So it's a long time from now, right? Shareholders got the return. Palantir is one of those companies where shareholders have not gotten their return yet. But 1,000 at 695. Erwin, CEO of Thacker Capital, just bought 1,000 shares at 695. Shout out to you, Erwin. Erwin, by the way, I don't know if you saw the investor update. I did a video this time. I'll text you the link if you haven't seen it. I sent it out on WeFunder, but if you haven't gotten it, it's a 37-minute video. So if you want to watch it, just play it in the background, listen to it. Lots of different stuff that we're doing and updates on that. Market has yet to bounce at pre-COVID level for a yacht. That is true. Sachin has to invite us on the yacht party. SpaceX will be $1 trillion company by 2030. Wait, so if it's $1 trillion company, Sachin, and you're at $16, assuming a little bit of dilution, the share price would go to about, well, like 8x from here, right? It's 150 billion. So it would be $820 or like $650 from $82, which means you would be up from $16 close to 11 to 12x on this investment by 2030. If you retain all your shares and if there's minimal dilution. Not bad. Not bad. Not bad at all. And see, if someone like Sachin is investing in Palantir, I'm not saying to just follow someone. I'm just saying this is why I started interviewing all these Palantir experts in January. You guys gotta remember, January 2022, I was pumping out all these interviews talking to Sean and Sachin and Chris and Sebastian, and just all these different people in the space. Matthew, who's a BP engineer who works with Palantir every day. And you look at what are these people doing in other investments and then why they're attracted to Palantir, right? Why it's an exciting investment. One could argue it's a cult. One could also argue the cult is forming because of the level of excitement, because the product is that good. And so these are the people that I like to, quote unquote, get my advice from, or at least get insights from. And I was just so happy in January 2022 to actually talk to these people, learn from these people, develop relationships with these people. Because when you do that, you just have a better understanding about the world and some of these investments. And we don't know if we're all going to be right, but if we are, it would be pretty dope. Maybe it wasn't the money lost, but friends we gained along the way, tongue in cheek, but grateful for this community. I love it. Thank you, Crossroads. I think that's the perfect way to end the stream. Thank you, everybody, for being here. 250 people. Appreciate it. If you guys want to pick up some merch, amitislegit.com, free shipping. If you want to support the stream, got some fun Audia hoodies for my startup and some fun Amit stock market open, wake your ass up hoodies. So you can definitely check it out. Thank you all for being here. I appreciate you guys. John, I haven't looked into Woozy yet. You can't believe how busy I am. It's on the list. I will look into Woozy. Is that if they say Woozy? I'll put it on the watch list right now on Webull. I'm adding it literally right now. And boom, it's on the watch list. I will check it out. Thank you so much, guys. I appreciate it. 250 people being here. A couple of videos coming out today. We're going to be talking about Palantir's Reagan defense video, reacting to that. Second, I'm going to be talking about Twitter and Microsoft search in comparison to Google. And then we have a Palantir NHS deal clip coming out as well. So that'll be the 3 videos coming out today. Thank you, everybody. Appreciate it. I will see you tomorrow. Bye-bye.